What's going on, guys? Happy Tuesday. So today we're going to talk about some of the craziest moves today. To start off, pretty much Bed Bath & Beyond. For those of you that don't know, last night and after hours, the stock pretty much rose. I think it was like 80% from a couple of days ago. So if we actually check out right here, from 13, went all the way up to, was it 25.61? Only within a couple of days. So again, that's about 80-ish percent, 84% right there. Realistically though, if we actually go from right after market, from 4 p.m., literally within, one aftermarket session, pretty much went up 52%, and then immediately after that, as soon as the market opened, it pretty much crashed. Not necessarily crashed, but crashed in the sense that it went up from its peak. But overall, from market close to actually when it closed today, it was up about 15%, which is pretty good. And after hours today, it's actually up right here. It says about 4%, so 3.58, which is pretty crazy. So for those of you that don't know what happened, we'll take a look at CNBC here. So Bed Bath & Beyond CEO says stock surge is a moment in time amid turnaround plan. So one of the actual reasons for this was I believe it was a partnership with Kroger. So right here, like it says, we'll actually read from the beginning. So Bed Bath & Beyond CEO Mark Tritton said the retailer's surging stock price won't deter the company from executing its turnaround plans. We're not in it for the day by day, we're in it for the long term, so it's actually pretty good news for them regarding that the stock itself is kind of a meme stock for retail investors, especially if you've seen Wall Street Bets. Bed Bath & Beyond stock is pretty much all over there, but right here pretty much says that on Tuesday, the company made a flurry of announcements, including the launch of a new digital marketplace, a tie-up with Kroger, and leadership changes, so all pretty much good news, but again, I don't think it's anything that would necessarily push the stock up 80%. So yeah, again, right here, that sent the stock soaring more than 80% extended trading and into Wednesday morning. So again, it's pretty crazy. Shares closed up around 15%, 1930 a piece. Anything else pretty interesting here? It's one of the most heavily shorted stocks, with 27% of its shares available for trading sold short. So that's pretty crazy. I mean, we could see a potential short squeeze there. That might have already occurred given the 80% rise that happened pretty much overnight. But I'm not entirely sure. I definitely have to look into that. If you know the short percentage of Bed Bath & Beyond, comment that below. And we'll see, if there's another short squeeze coming. Okay, so outside of Bed Bath & Beyond, another stock that I haven't necessarily seen being talked about a lot is actually Digital Turbine, which is down about 19% on the day, up about 2% after hours. But again, that's pretty much irrelevant considering the stock was down 19% overall, or 19% during the day. And so a couple of the reasons why they actually just reported earnings, I do believe that they did beat on revenue and EPS, except they didn't necessarily beat on guidance. Let me pause that right there. So one of the actual bad things about that was that they did not beat on guidance. So it's very unfortunate. So right here, we'll actually read into this. So 10-week run, which is pretty crazy. It's a great momentum. Came to a halt today after the stock plunged after it reported fiscal second quarter earnings at top views, but guidance may have disappointed, like I previously said. So talking about 19.2% close. The software company, mobile app and advertising software company, reported results. Earnings were 44 cents a share, up 193% from a year earlier. So the company's growing, substantially within the past year. Revenues rose 338%, which is also pretty crazy. And a couple other things right here. So again, it pretty much shows that the company's still very strong and they're growing a lot. But unfortunately, they did report sort of poor guidance. I wouldn't necessarily say that the guidance was that bad, but I guess it just really wasn't as good as people were looking for. So that's definitely a reason why the stock did as bad as it did. But realistically, this is a stock that I am still long on, and I think that it's going to perform very well in the future. A lot of price targets are sitting around, around 102, I believe, is a median, and then some are even as high as 130. So there's still a lot of potential, and given the price right now, I think it's around $72. That's almost 100%. $72 right here, 74 after hours. It's almost 100% increase over the next 12 months. So we'll see what happens. Hopefully they report good guidance and good earnings next time. But we'll see where that goes. And then for those of you that don't know, Zillow today also did not perform very well. They had a 22% or almost 23% loss today. After hours, a little bit up. But for those of you that don't know, the reason why is because of their home flipping business. And, for home flipping right now, it seems like the market's extremely hot. The home market or real estate market in general is actually really high, really impressive right now. So for a company to be able to own a lot of properties and not be able to flip them is actually kind of pathetic in my part. But right here, we'll read it right here. So Zillow, ZZG, will stop flipping homes in a move that came just one day after Bloomberg reported that it was unloading 7,000 homes that it bought via its home flipping business. So to put in perspective, Zillow ended up buying 7,000 homes. A lot of people were actually pissed off about that because, again, like I said, the real estate market is booming. People couldn't afford housing, and it seemed like Zillow was kind of just taking that away from them. But yeah, so they essentially bought a lot of homes, and they decided to sort of stop right there, which is actually pretty unfortunate. I believe that they were also laying off a lot of different employees within the company, so a lot of things that necessarily aren't so good for the company. I think they reported like a $300 million loss off of that, which it's safe to say that isn't the best news to report. So we'll actually check CNBC here as well. Plunges 25% to lowest since July 2020, so it's lowest in over a year. Right here, so like I said before, a loss of over 300 million. It's actually right here. It actually says 422 million, which is pretty impressive. Zillow said in its third quarter earnings report that it was exiting the offers business after the company reported a pre-tax loss of 422 million in its home segment, which is very, very unfortunate. And Rich Barton told the CEO, Rich Barton told analysts that offers were ultimately too risky, too volatile to our earnings and operations, and had too low of a return on equity opportunity. So again, you'd think that a company being able to flip houses in, a crazy home market would be able to return a lot of money, but unfortunately, it doesn't seem to be the case with Zillow. And that's pretty much all the crazy news that I've seen today, all the relevant news in my opinion. If there's anything else you guys want me to look at, please, write in the comment section below. We can talk about it later this week. And if there's anything that you guys are personally invested in within these three stocks, please let me know. Please play it safe. Do your due diligence whenever you're looking at stocks. Don't trust Wall Street bets all the time. But if you want to go into a risky play, by all means, go for it. Remember to like, subscribe, comment, and I'll see you guys in the next video.